Good evening, everybody. This is Joshua Hayes at BigWaveTrading.com coming to you with the December 18th market wrap-up. What I'm going to do here is I'm just going to go straight down the line on my all indexes page and go through each index. The first one that we're going to start off with is the S&P 500. Today, the S&P 500 sold off 2.12%. And what I want you to notice is that volume was higher than the day before. That is technically a distribution day, but in this distribution day, I want you to notice there is a little tail that means that whenever the market hit the lows of the days, we came off of it a little bit. That means that the selling was not extreme into the close. So it's a slight positive on a kind of bearish day because the market couldn't hold the 50-day moving average and also sold off on a heavier volume. The Dow Jones Industrial Average is the same way. It cut back down below the 50-day moving average, also having a little bit of a tail. Also, volume was heavier. So technically, with the 2.5% decline, it is a distribution day. However, volume is well below the 50-day volume average, and we're still in an overall past 2 months going nowhere. We're in a consolidation area. As we can see, like right here, let me just go sideways. Here, as you can see from the 15th of October to the 18th of December, it's a 0.32% move for the Dow Jones Industrial Average. So basically, we've gone nowhere. That's why we haven't had any great successes in any longs or shorts recently. However, the new long we did take yesterday was up 6% today, and that is a great thing to see, of course. The very next stock or index that I want to show you is the United States dollar. Remember how I told you it was looking very bearish and you could have hedged yourself with a short position if you were long earlier when they closed below the 50-day moving average? Well, now you would want to close out that short position if you had it with the bounce right here at the 50-day moving average, which is a clear indication of support at the 200-day moving average. So you would probably want to go ahead and cover, take your profits, which would be about a 4% gain, of course, on margin using a futures account. You just did really well there. And, of course, you would still be long some of your long position from August whenever it took out the 250-day moving average, and you'd have a 7% gain like that. So the dollar found support at the 200-day moving average, which is a bullish sign after the very negative session we had. Now, what's important is to see if we can retake out this 50-day moving average. If we can do that, then that means that we continue to be right, that cash is king. If it falls down below the 200-day moving average, I'm going to start praying that I get some stocks showing up in my scans that I can go long and make some money on, because the amount of nice-looking charts out there is disgusting, and I need some help from the stock market. So hopefully something can happen soon in the stock market arena, or else I'm going to have to stay short, pray that we roll over, and my shorts make me more money. But to be honest with y'all, I'm 90% plus cash. So you basically all know where I'm at, and that's where the majority of my people are at. Volatility index is now trending below the 50-day moving average, which suggests the market should be trending higher. But the fact that we fell today and the VIX fell is very unique. So it shows that as we fall, you would think fear would increase in the market as, oh no, we're going to go lower. But instead, fear came down and more people got more complacent. So that's something I'm having a trouble understanding with this rally, is how even whenever we sell off, people have less fear than they did before. So that's kind of odd. The NASDAQ 100 can't hold on to the 50-day moving average. The good news here is that volume is lower, and that confirms with the NASDAQ. But still, the NASDAQ couldn't even get above the 50-day moving average to begin with, and it continues to have major problem getting above this 50-day moving average. The Russell 2000 is back below the 50, so is the S&P 600. The VIX also shows you a falling VIX while the market fell. Very odd to see a market fall where people are supposed to rise in fear, have the VIX actually fall and say that, whatever, we're complacent, I'm sure we're going to go higher. So that's a little odd. New York Stock Exchange is about the strongest looking one, as it's barely holding on to the 50-day moving average. It's right at the line. Stronger volume, still a distribution day with a 2.64 loss. Now let's take a look at the metals. Platinum. Platinum is still above the 50-day moving average, but barely. If you went long, you're barely holding on. You might not be able to have that long for much longer. However, the next time it takes the 50, the chances of it succeeding increases. Let's look at silver. Silver holding on, had a pullback today, but it's still holding above the 50-day moving average, so the small long is good. Gold got stopped right at the 200-day moving average, which means if you're long from the 50-day moving average, you would still be long. However, if you were long from the 200-day moving average break yesterday, you do need to cut your loss today. And something else that happened is that the gold and silver stocks that were building some very bullish chart patterns, there seems to be some minor problems with them. However, most still look very bullish. Most are very, very green, and even on the pullbacks today, they were on low volume. So hopefully gold and silver can set up and break out and become some great longs for me, because my chart window is looking pretty ugly out there. I don't have too many max green BOP, huge accumulation, nice tight price pattern stocks out there. And what's sad is that Telechart doesn't have over-the-counter bulletin board stocks, so a stock like AIPC that we would clearly have gone long on June 18th and would have clearly have gone long on August 7th, and then we also would have gone long, honestly, here, but we would have had to have cut our loss, 923 to 1008. So by not going long there, and if we would have taken profits on the gap higher, we lost 113% gain. If we would have taken more profits on the very next day, 125%. So we missed out on 125% since Telechart decides not to have over-the-counter bulletin board stocks. Thanks, TC. You have a great software, but you don't have enough products in there or enough stocks in there to really make the product a big bang for its bucks. It's still the greatest charting program out there. However, seeing that over-the-counter bulletin board stocks clearly work with all this max green BOP, with all this heavy accumulation, and with this great price action, I really would like Telechart to add these. However, they're probably not, so whatever. We'll just have to wait for the NASDAQ and NYSE stocks to look like this again before we can make the 125% gains in 6 months. This is Joshua Hayes at BigWaveTrading.com. I will be back with a part 2 right after this. Have a great night or a great day, everybody. Aloha.